We're gonna start this a little bit differently. So I'm gonna ask the audience, if you're able to, for everyone to please stand up. On your feet, come on. Come on, up, up, up. I know you're all hangry, but this is the last stretch before lunch, right? Okay, so, and it's okay to admit if we don't know things. I want everyone to sit down who doesn't know or has a limited understanding of what regenerative economics means. Okay, we have some knowledgeable people in the room. Okay, take a seat if you have limited or no understanding of how tokenized carbon markets work. Perfect. Same question, but for real estate. Okay. Same question, and probably my favorite, this sort of tokenized alcohol industry. Okay, Sarah, you can leave because you're not going to learn anything new today. Or we're going to take it to the next level. All right, so as the name suggests, we're going to use the next 40 minutes to explore how tokenized real-world assets are being used in the regenerative economy. That's actually a really difficult word to say. I'm going to start with asking my fellow panelists to introduce themselves, and then also, if you were to explain what regenerative economics means to your mum, how would you explain it? Luke, you're up.
Brilliant. So I'm Luke Robertson from Degen Distillery. I'm director of Web3 and Creative. Degen Distillery essentially is a spirits and alcohol brand, and we're tokenizing sales contracts through using RWAs. How I would explain that to my mom is a difficult one. I think it would be simplifying it and making it. This is difficult for me.
Yeah, I can see that.
Yeah. I'm struggling with this one because it's alcohol and everything else, but
which is a regenerative spirit in its substance in itself for some people.
I think it's taking the community element and basically putting it on chain and basically enabling that to regenerate the more sales and then be able to pull it around.
And put back into the community.
Yeah.
Perfect.
Essentially.
Mary?
Hi, my name is Mary Camacho. I'm the executive director of Holochain Foundation. It is difficult when you try to put things that are using such new technologies into the context of how would you say it to your mom, but I think it's super important. First, I'd thank her for my scarf, because she gave this to me. But I think I'd probably try to liken it to a problem, like the problem that we have with recycling, that it doesn't accomplish what it needed to accomplish, because we can't really get away from that we still have problems by the generation of plastic, for example, which we were talking about because of the plastic bottles we're drinking out of, right? And that regenerative means that we can actually include the solutions to all those things we call like external to the production of plastic, and that we can somehow make up for it and use it correctly. So I would probably like link it to something she knew, and that's about as far as I'd get. And then I'd ask Pete for what he had to say.
Hi, I'm Pete Corke. I'm with Kwasala. We are an indigenous-led and majority-owned forest regeneration company. We take genuinely at-risk forests, we turn them into protected forest areas that then generate premium carbon credits, and we are securitizing the equity in the companies that own the right to do that. So you can buy living forest shares. We have a 140,000 acre pilot that's going live right now in British Columbia. And so, yeah, that's my day job, helping people invest in forests. My mum is an economist, so no, I'm joking, she's not. Economics, as we think of it, is actually extractive economics. All of our economics rely on planetary capacity. And basically, it's actually a death economy if you think about it, because it's always dead nature that we're actually monetizing. And so the way I describe regenerative economics is, if extractive economics is actually like the North Pole, regenerative economics is the South Pole. We need to create a counterbalancing economic system to help counterbalance the impact on nature that our extractive economics has. And so Mum would then say, WTF, and I'd have to start again. But that's how I'd explain it first.
Okay, I like that explanation. I'm sorry, guys, but I think Pete's winning so far. Dennis?
Hi, everyone. My name is Denis. I'm the CEO and co-founder of a company called Blocksquare. What we do is we provide the infrastructure for companies to easily tokenize real estate and bring it to their communities. Not sure directly how to introduce this topic to my mom, but there's a certain figure that's there for 20, 30 years when it comes to real estate, and in the end, it all ties to real estate in essence, right? 800 billion every year is invested directly in real estate assets, and 85% of this goes into 100 cities. It means that all the other markets around are totally neglected, and there's severe illiquidity for real estate assets there. And I think when it comes to regenerating the economy, that's a crucial point, because people need to migrate into these big cities to offer equality of opportunity to their children and so forth. And it comes to energy consumption and so forth. So if we're able to bring liquidity to the other municipalities that have been neglected by the centralized kind of financial institutions, and it's not their fault. They're there because others are there and it's easier to trade. But if we're able to solve this problem, I think it, in the same way, solves many other contingent problems, let's say.
Okay, so to summarize, I think, and what we're going to explore today is that regenerative economics we're really looking at here is around sustainability, greater inclusion, and then also community aspects of how tokenized assets can facilitate all of that good stuff. All right, so let's start with the basics. So tokenization sounds pretty simple. You just create a token version or a digitized version of something that exists in the real world, let's call that. Easier said than done for anyone who actually works in this space will know that. Pete, I'm going to come to you first to give us just a quick rundown of the forestation project that you have and how you're actually delivering the tokenized aspect of that.
Yeah, thank you. So really the tokenization is the last part. The tricky lift has been the creation of the real world asset. What the tokenization does is really enhance our ability to then make that asset liquid and trade it. The tricky bit for us was actually creating the legislative framework for our product to actually be legal. So we create our protected forest areas in a very unique way. We don't buy the land, we buy the right to kill the forest on an annual basis as a logging license.
So you're talking about a forest project that is supposed to be a sustainable forestation, am I using the right terminology?
Yeah, forestry, regenerative.
And you're doing that by tokenizing the right to kill the forest?
Well, no, not quite. So we do something else first. So we buy the legal right to kill the forest, and then we legally collapse that privately, and we create a right to regenerate. So we turn it from a death contract into a life contract for the forest, because
amazing.
That is actually what it is. And then we put that into a business. The business then generates premium carbon offsets that it can sell on an annual basis. And then we can tokenize those offsets, which makes them from a particularly useful point of view of tokenizing those assets. It creates provenance, which means that there's less due diligence for our clients. We get a better price for them. But then also what we can do is we've basically created a reversed logging company. So we can then also tokenize the securitized equity in those reverse forestry companies, and we can sell those. And that basically creates ultimately, at the core of what we're doing, we're selling positive nature impact. And what Web3 does very well is allow us to therefore ingrain provenance of that impact into everything we do. And that's one of the key parts of what we're doing.
And it's actually an interesting approach because, as we were previously discussing offline, that this is actually a much cheaper and effective way of approaching this rather than buying the land and just preserving the land, which would cost what, around the pilot project you have is about $2 billion, right?
Yeah, so, the tricky bit for us was also actually making what we do legal first, because technically buying a logging license in British Columbia and not cutting down the trees was illegal. So we had to first work to change that. which we did in May this year. And
Oh, and by the way, we have the British monarchy to thank for that as well. So
there may be a colonial backstory there. Let's not go down that rabbit hole. But the key thing is, yeah, price. The trick that the extractive industry had is the logging company didn't own the land either. They owned the right to kill it. That's pennies on the dollar. So we've been able to securitize the equity in this living forest for a total value of around 15 to 20 million. That's less than $100 an acre. If you were buying that land in British Columbia, $15,000, $20,000 an acre, yeah, it's a $2.5 billion asset.
Yeah.
But you couldn't buy it anyway, so it wasn't on the table for nature protection until we shifted that legislation.
got it. I just want to shift the focus over now to the real estate industry with you, Denis, because I'm sure anyone who's sat in this audience has likely heard a tokenization panel before. And one of the key asset classes that's touted for a key use case for tokenization is real estate. I would argue it's probably one of the hardest asset classes to actually bring on chain for myriad reasons. Do you agree with that statement? Or do you think actually, no, there's real promise here and there's things that are actually happening in this industry to move forward?
I'd say I partially agree with the statement. So the methodology of how you transfer the value of a real estate asset onto tokens, which is in generally called tokenization, but there's many ways of how you do that. One of the most kind of common ways you find on the market is tokenizing shares of a company.
Yeah.
That takes you to the securities regulation, and you inherit all the burden there, and you get to certain confinements, and it's really hard to actually get it to communities in Web3. There's the other way how we do it, where legally speaking, the transaction is dissected into 3 steps. I'm not going to go into detail, but at the end side, it's regulated under MiCA regulation. Now we finally have it in Europe, and it means that you are creating tokens that have economical rights attached to the underlying asset, but you're not tokenizing traditional securities, which means you have much more space to move across and allow tradability on the secondary markets and so forth. In terms of the hard part,
to that as well, because no real regulator or no big regulators come out and put a line in the sand and say this is how we're going to regulate tokenized securities. There's a little bit going on in Switzerland with sort of stuff that's issued natively on chain, but what you're talking about, that sort of asset-backed piece,
yes,
no one's really doing that. So it's great that you're falling into the MiCA regime and not into securities.
We've focused on the side of property rights. When you have title over a real estate asset, you own a bundle of rights. And that bundle of rights can be dissected, and you can just take the economic rights that derive from it and tokenize those. And you can create legally binding tokens. What we have achieved as well is actually securing these tokens with a lien on the title. So you as a token holder have a direct, basically, connection to the underlying asset. And that's something that is commercially viable in Europe, in other countries as well. But of course, the hard part is educating the community behind it how to utilize this, understand this as a viable investment product.
Yeah, it's the actual marketing aspect. What are you actually investing in that becomes the issue?
So the demand side is a challenging one. On the other side, the supply is very fragmented. Real estate is distributed across the world. And having access to, residential real estate in East London doesn't mean you have access to deals in West London. And when it comes to this, we don't see, a one winner like an Amazon of tokenized real estate. Instead, we see, a scenario where there's going to be thousands of these online shops delivering assets on chain and bringing it to a global audience on the other end.
Great. Degen Distillery. I haven't heard any other use case in this field. It's a really interesting one, and possibly this business model only made possible by the fact that blockchain technology exists. Do you want to give a bit of a rundown on how it works?
Yeah, I think it's probably one from the most complex to probably one of the most fun things to take on chain, to be honest, which is alcohol. The whole business and premise behind Degen Distillery is blockchain first. That's kind of where we started from. In essence, the idea was how do we enable a community that are fractioned like all over the world, essentially, and enable them to grow and stand behind a company and be able to benefit from the growth of that company. So what we wanted to do is basically turn the community that essentially in a lot of other projects wouldn't get any benefit from the company growth, and turn that into giving the community the tools through our protocol called TAP protocol, which is Token Affiliate Protocol, where community can go out all over the world and essentially be able to onboard pubs, clubs, bars, restaurants, whatever it may be, to stock our vodka. That gets tokenized on-chain as a contract, and essentially every time any of those venues relist the product or order more stock or order again, they essentially get in perpetuity commission paid through that smart contract that lives on-chain. We're currently working through all of that technology at the moment, that we're getting pretty close to a lot of good stuff, and even being able to use some financial things against that as well to alleviate some of what future commissions could actually be as well. So it's not only that, it's obviously taking what products we do have on-chain and having digital collectibles to the side of that as well to prove, again, provenance on-chain. And then from there, we can actually track what we've been selling, where we've been selling. We can start to get a bigger, we can get a bigger sense of where we're going in the economic strain in those areas as well.
Yeah.
And then we're obviously partnered with Brewdog, who are one of, I think it's the carbon negative distillery in the UK. So yeah, we're definitely building towards trying to bring that community into the ecosystem.
Yeah, so it's a real like distributed sales model that is made
yeah.
possible through the use of this tech,
Exactly,
which is awesome. So we've heard about how this stuff is being used in real world examples, but let's actually talk about like the challenges of this stuff, because it's not easy having that data, verifiable data set on chain that says, yes, I'm investing in this forest, yes, I'm investing in this property right, or yes, I'm gonna be able to go out there, sell this vodka and get the money back for it and what have you, the commissions. And that's why I wanna bring Mary in from Holochain, because, well, tell us a little bit about Holochain and what the problem, the real world problem that you're solving.
Sure. Well, Holochain is not a blockchain. So let's start there. It's a distributed ledger technology. It is a peer-to-peer infrastructure. And it really is a data integrity engine of sorts. So it gives the ability to sort of work alongside a lot of these kinds of projects as sort of a verifiable data layer. In the context of Pete's project, for example, the issues that we've all heard of in the carbon markets have been written up in, I think The Guardian did a massive investigative report a few years back about they're all BS, like underlying.
I think we're all surprised there's still a carbon market.
Exactly, that a lot of these
given
companies
what's
survived.
happened. Yeah.
It's shocking because basically they said, oh, all those forests that you thought you were buying carbon from, they're not real, the trees are dying, they're on the wrong side of a mountain, they say have acres of it, but it's, some like dirt on the ground. This is real. We've seen a lot of like scam type things happening in what should have been trusted businesses that are backing assets that then governments are saying we have to purchase for these offsets so that we can go fly airplanes, or sorry, be passengers. I'm not flying anything. And but the thing is that there are ways to prove what's there. And there's lots of mechanisms. When we start talking about buying tokens, you're saying, okay, this proves out that I have the rights to a particular set of land. So you've gone this far with kind of getting some contractual rights that are then ingrained into the token that you're going to be selling that is referencing the carbon credit. But at the end of the day, a forest lives on and on and on. And you need to know that that forest is still a carbon sink. You need to know that it's a carbon sink today. You need to know that you still have old growth trees on it. You need to know that it's actually an environment that's going to continue being the source of carbon credits, not just a once and done thing. And so what we do is we work on that other layer of, well, how do you keep proving that over time? Well, you might do it by having GPS photo data that's actually part of a system of, yes, this is what we're selling. This is a continued thing. We've got photos that show what it was here. Oh, the forest grew. We've got thicker trees. We've got taller trees. We've got more. You talk about it sometimes a lot better than I do because it's your forest. So maybe I should hand over to Pete to kind of tell the story. But this is why we're here, is because, you know, Pete's looking at putting in the distributed nodes using Holochain to be able to keep tabs on what's happening on the ground. Because what's happening on the ground is what backs the reality of what you're buying.
It's like that constant attestation piece that's really critical here.
It's the continuation of trust.
Yeah.
It's the ongoing trust. And what the Holochain technology does really well for us is drastically reduce the kind of transaction overhead so that we can actually cryptographically secure the entire data set. As I said earlier, we ultimately sell impact, positive impact, and proof of that is very valuable to us. It allows us to charge more for our product because companies are willing to pay more money for offsets that have such great provenance. So the more provenance, the more trust.
So do you think this could be a viable solution to the problem of greenwashing?
Yeah, absolutely. It's about giving your purchasers of the commodity that we sell, which is actually an eco-service, line of sight of that provenance, and a guarantee that, you know, one of the biggest concerns of big corporate buyers of offsets, particularly after the Guardian article, is, you know, are we going to buy something that's going to bite us down the line? It's not even today, it's in 3 years' time, because a lot of those credits were discredited because of, you know, historically. So, you know, these are credits that have been purchased for maybe 5-6 years in a row by companies. And it's about maintaining trust rather than just the trust of the specific transaction. It's the trust of the whole data layer leading
that then stands up over time.
Exactly, yeah.
Yeah. And just to kind of talk about it in a different sense, there are lots of projects, whether we're talking about the smart buildings, whether we're talking about all these different like physical realities, that they're measuring things ongoingly. They're measuring and they're getting some little certificate. But that little certificate, as we know, is still based on a person oftentimes saying, yep, they're still good. Yep, they're still good, right? But what if you actually had line of sight? What if you were seeing the metrics coming out of the systems? With Holochain, as an example, we work also with energy systems, distributed energy systems, where you are seeing the energy move through in the sensors and then being signed cryptographically into the databases. You have ways of managing all of these different kinds of real moving bodies of data that can continually give proof, continually do the verification, which takes out a lot of the sort of manual and relational sort of proving mechanisms that we've been using to, I'd say, greenwash in many ways.
Yeah.
Is it real when we create them? Is it with good intention? Absolutely it is. Does that last over time? That's where I'm not so certain.
Okay, so we've got these solutions in place. We have the attested, verifiable data. We have the ideas for how this can be used. So what's holding this back? Like, Denis, what are sort of some of the biggest hurdles you're finding with adoption of these tokenized assets, or is that an unfair statement to make? And actually, we're seeing communities use these products in very meaningful, real, tangible ways, but maybe sat here in London today, we just don't have as much use for them.
There's adoption. I would say last 2 years or 2.5 years, we've seen potential, exponential growth when it comes to RWA, which is now a hashtag, right? And people are looking for this sector. When we started back in 2017, 18, it was a very marginal thing. It was an idea, it was a recipe of how you transfer value from the real world onto tokens. There was a lot of missing pieces in terms of tech, but as well, in terms of knowledge, understanding on the market. Now we have companies like Boston Consulting Group educating the market about this sector. We have, BlackRock openly talking about tokenizing real-world assets. When it comes to real estate, the sector where we focus, it's just a niche within the niche. So there's, again, lack of understanding. And we're trying to really push, as one of the top brands in this space, to transfer knowledge to the communities who are early adopters of it.
What communities are those? Who are actually using these things?
So, for instance, we are an infrastructure provider, and this means that we enable projects with tech and tools and regulatory, or let's say the tokenization protocol has also the legal part with it. And these communities are vary, immensely. We currently have around 13 projects, 12 projects that are running on our tech. We have, for
Where in the
instance,
world are they?
we have a company from Belgium focusing on co-living. We have a company, we're talking about distillery, company in Mexico running a distillery and kind of owning this big piece of land where they have received permits to build on top of it a more kind of community-oriented set of buildings and infrastructure. And they want to tokenize a small tranche of it, I think 10% or so. Everything else is financed traditionally. We have a project in Uganda which has a lack of access to traditional financing.
Right.
They have been able to finance the first development, the first 10 units of that village, which is a kind of, they go more into the tourism sector. And now they are kind of looking for a community-led financing tool, and they use tokenization for it. And there's,
That
others,
whole
but
inclusion piece. That,
exactly.
Access to financing in traditional mechanisms not possible, and this has made it possible.
Or a blend of two, right? You might have access to traditional, but since 2008, the restrictions on banking financing, on the traditional financing, they leave a gap. And tokenization can really well serve that gap because it creates a relationship between the equity holder and the token holders that's different from debt and different from equity. But it's kind of like a mezzanine that has a much better protection than the traditional mezzanine we see now.
Okay. And then because I know we've only got about 5 minutes left, but I just want to come back to Degen Distillery with what's holding this back from everyone going out there and selling vodka and getting a share of that profit base?
I think at the moment, especially, even yesterday I went through the team at Degen Distillery in the office and tried to onboard them into crypto, and it didn't go very well. I think it was very complicated. Some of them are here today as well. I think a lot of people say it's education, but I think
that's such a lazy answer.
I think if you have to educate to that point, then the product's not good enough. For us, because we're consumer facing, that is.
It's almost like the blockchain element you don't care if it's blockchain. If it works, it works. Right?
Yeah, exactly. And that's kind of proven the use case of blockchain, I think, in a major way. If it's not one, enabling something that's a benefit, or at least being the same as what you're kind of already used to, I think you're overcomplicating something for the sake of it. So we've been very specific in how we're trying to build and onboard and how we're trying to actually build out this technology to make it as seamless and as simple as possible. Because we're a consumer-facing product, being in the alcohol industry, there's a huge market there that we can actually tap into and enable customers to be then come in not only on the RWA side and distribute the vodka, but also get rewards and that type of thing from it as well.
So that's a great statement of the challenge. Last year, we were here at the same conference, and we had a POC project that we were demonstrating in our booth called Fractal Tribute. It was a collaborative art game. And I'm saying this because the purpose of that was to demonstrate that adoption can happen when you make things easy and accessible and fun.
Did it abstract away the blockchain element?
Well, this project basically started with artists installing an application, playing an art game, creating artwork, and when they saved it, they were basically creating open edition NFTs with it. And they were basically connecting something that they could start with easily, and then they would be like, oh, okay, so I need, if I want to do the NFT side of it, if I want to get it on chain, then I need to have a wallet, and I can actually bind my keys from holochain to blockchain. Then they were doing that. What that then created was a whole list of, or a whole series of artwork that got put up on a leaderboard and people started buying and then they got claims from it. It actually was very similar to what you're talking about. What we allowed for was you can get started without having the wallet. You can do something of value first in a way that actually has that same traceability, verifiability, provenance, who are you, starting in a simple way. This is what's critical. This is what's critical for adoption, and we need it in all of these things. So I think a lot of the projects, if you're looking to solve this, you actually need to look at other types of technologies that really align well with that distributed kind of heart and soul, essentially, and start there and then bring them into the community and the ecosystem of the crypto as sort of a next step, because it's difficult.
Yeah.
So.
Yeah, I think there's so many good points. I think it's critical to make it super easy, I think, and the easier the better. And I think there's a crucial point where you have to make the decision whether this actually, does this need to go on-chain yet?
Yep.
And I think a lot of projects get that wrong, where they try to do it really early on and make it that, and then onboarding just gets really difficult.
Exactly.
Yeah.
You're seeing the likes of exchanges now and all kind of different wallet apps that you're not writing down 12 words, you're putting in an email address and then you're able to get that wallet address. You can mint by putting in a wallet address and then claim it later through. So the technology's better, miles better than we were like 3, 4, 5 years ago, and it's getting to that point. But I think as companies that are trying to build with that technology, it really needs to be thought out in terms of not making it more difficult than it would be if it wasn't on the blockchain. I think that's like really critical.
Yeah, I agree with that. I was hoping for a bit of tension and disagreement on this panel, but sadly you want to do really good and you know what you're talking about, so that's great. No, I'm really joking. So I think this has been really, well, hopefully insightful in terms of seeing how this technology is being used for sustainability, greater financial inclusion, and then how we can really engage in commodities and actually build new business models as a result. 50 seconds left. What is the tipping point for mainstream adoption of these things? And I'm going to do quick fire, 10 seconds. Denis?
First, we need Web3 to adopt.
Okay, that was quick. Pete?
I think stop focusing on Web3. Focus on business models at work.
Yes, love
And
that.
Web3 is the plumbing. You don't sell a house by telling somebody how the plumbing works. Just tell them what the
If you did, that would be very dumb. Yeah. Mary?
I think business has to adopt verifiability at the level of what the market wants and what the users want.
Get the foundation right?
Yes, get the foundation right, but with the demand being the forcing factor.
Yeah. And finally, Luke?
I think it's ease of understanding, putting Web3 at the back, so it's the onboarding thing that you actually don't realize you're onboarding into, and then empowering and creating a community where those people can actually come understand that technology and then grow it out from there. I think community is one of the most powerful and most valuable assets in Web3, to be honest, as you're starting 100%. A company.
Amazing.
And regeneration as a whole. It's about community.
Absolutely.
Awesome. Well, everyone, if you'd like to applaud our panel, thank you very much.